Welcome to FX, and here we're looking at the US dollar. And last time we spoke, we were looking for a bounce off the 79.50 here back into the group 2 here, the 79.72 and the 79.80 here, just to retest that. And that's occurred from the NFP figures coming out, strong employment figures, and expect this to move lower. I guess one way to look at this too is to have a look at the Swissy against the US dollar at 88, and while it stays under 0.88, then the bias is to the downside, and that will help with the US dollar, also help with the euro to the upside as well. So with the euro to the upside, last time we spoke we were looking for a corrective pattern, ABC pattern here, back to this area through here, and just get that out of the way. So that's sort of wave 2 here now, that's in play here. And then this move up here appears to be impulsive, so that means that, let's just go on, we're heading up to wave 3 here, so we can put a projection on wave 3 up into this area here to start with, but be higher than that as well. So just sort of drilling in here a little bit, this little 5-minute chart here off the low here, we've either got 5 waves to here or we've got 5 waves to here. Either way, an ABC corrective pattern, 61.50 to 61.8% would be the 38.50 and the 38.40 here. So it's possible for it to work its way down to this area here before we see further upside. However, in terms of trading, if the 138.72 becomes a really nice support, as does the 138.80 here, then you want to be like adding through there. You want to be building the trade in now, but yeah, you should be long anyway. The Australian dollar, just the daily chart here, as we spoke last week and have been speaking, is that there's 2 possible counts to the upside. One of them is the 1, 2, 3, 4 here and 5, and the other is the ABC, which is the A wave to here, the B wave and the C wave to here, and then we go down here for 1, back for 2, down for 3, and so forth, taking this low out here. The wave 4 scenario, look, it's pulled back to its 38.2 retracement level, also to the wave 4 of 1 lesser degree here, bar 5 little points, so quite accurately. So, you know, we can still have that wave 4 there. We just got to track two counts, that's all. So either way, the move up over from Friday's NFP figures with all markets, well, not all in the same direction, of course, but the move up off 92 here is in 5 waves. So well, this is a little bit tricky in here because of that little spike back down through to here, but obviously this looks like the 3rd wave, the 4th, and the 1, 2, 3, 4 to here, and 1, 2, 3, 4, 5 to here. So once again, we can expect some type of retracement level through here, in terms of 3 waves here. So that's something to look forward to, back to the 92.50 and then further up through there. But you know, depending on your trading strategy and what type of risk you hold and all those sort of things, you know, while it's above the 92.72, and this is a really critical number, as you know, I've mentioned many times, but so is the whole of group 2 here. So, you know, it may not pull back so much, and I may have the wave count wrong. We may have 5 waves to this point, and this is the ABC back, and this is basically up for 1 and back for 2 and so forth. So look, basically just by strength, allow it to open, let it find its feet, and take it from there. But the main trend is upward. The 2 important numbers are the 92.72 and then looking for support on 93. There will obviously be, you know, price action, corrective price action through here, but the daily market is still deeply oversold, but there is, you know, momentum to the downside as well that needs to be corrected. But the time the daily is overbought, the momentum should have shifted to buy on the daily as well. So look, basically there's two possibilities in the bigger picture, and we just need to work through them. However, intraday here we can expect further upside. The Euro Australian, look, same story, no change. The story is 150 as support, creates a positive market. Otherwise, it can fail from here because the count that we have here from wave 3 to wave 4 here, it may be completed in terms of the A wave, the B wave, and the C wave, or in more of a bearish picture, we could have 5 waves developing as wave 1, wave 2, wave 3, wave 4, and wave 5. Wave 4 is starting to overlap into wave 1 here, so that's a bit of a no-no. It breaks one of the 3 Elliott rules, and overlapping wave 4 overlapping wave 1 is normally the weakest of those 3 rules that get broken in leveraged markets, but we wouldn't accept that rule to be flexible in stocks like the Dow Transports, the Dow Jones, so forth. Just in leverage markets, we need to sort of accommodate and allow that to occur. Anyway, look, we're just sitting waiting to see if we've got failure here. We know that the 149 becoming a retested resistance would be a failure, and see further downside. But the 148 is the first minor level under the 150 medium level, so that would, definitely be shorting through that. Right, the pound yen here. We were looking for 173 to become the support there. Well, we weren't expecting it to, but if it did, we would be adding to positions. The price at 172.34 has taken out our stops for our long trades at the 172. So the US dollar yen can have a turning point now, and that would make turning points to the downside for the pound yen and the euro yen that we look at. And in fact, the 5 waves that we're looking for in the Australian dollar and the euro to the upside, we're seeing the same thing to the downside here in 5 waves. So this would be the 5 waves here. Quite clear in this case, the 1, the 2, the 3, across for the 4, and down for the 5. Now, that could come a little bit lower into group 1 here. After 5 waves, we get an A and a B and a C as a retracement level, so the 172.72, depending on how far this comes down. So 5 waves down, some sort of retest back up here to supply, may even retest to 73, depending how it works, but you're looking for 3 waves. Once that's occurred, then it'd be further downside. And it's the same with the euro yen as well. We've been working through the triangle pattern here, and look, basically we were thinking to ourselves, it's pretty messy. Look, if support comes on 142, then we'll be to the long side. Otherwise, the triangle pattern would be in play and working to the downside. And it's tried to find support on 142, but just hasn't managed it. And because of the euro, the US dollar yen can have a turning point in it now, then this market would as well here. It hasn't given us 5 waves down, it's only given us 3 waves down in terms of 1, 2, and 3 here. So, it can be bullish, but we would expect this low here to be taken out. But it's something that we can note here. But if we do get 5 waves down through to here, then we'll get a counter trend retesting supply at 142 and then down from that side there. But if we only get this 3 waves down here, and then we still get support up here, well then we'll be long again on that support there. Alrighty, well that's it. So look, the main point is that there's a high probability of the US dollar moving through lower, and we can keep an eye on the Swissy doing the same thing as well, as long as it stays under 88. And of course the other markets would reflect that. The Australian market, or the commodities market, can also be stronger as well because of base metals looking stronger as well, gold and copper, and of course the other metals as well. Alrighty, cheers.